Hi everyone, this is Poornima of BCom BI NGM College. I am here to present on the topic GST model in India. GST means Goods and Services Tax, which is a taxation system that is being followed in India from 2017. Lot of countries in the world follow GST, but we, India, as a federal system, adopt the dual model of GST. So we are going to see about the dual structure of GST that is being implemented in India. In India, we all know that we have two systems of governments. One is the central government and another one is the state government. Each government has the power to tax the people on various aspects. So in case of GST, both the central government and the state government play an equal role. Here, interstate and intrastate transactions are recorded. First of all, in interstate, where a supply of goods and services which takes place within a particular state. A state here means, for example, Tamil Nadu. If the seller and the buyer both are situated in the same state, that is what you call as an intrastate transaction. Whereas in case of interstate transaction, that is a transaction of supply which happens outside the state. For example, if it is happening from Tamil Nadu to Kerala or Kerala to Karnataka or even outside the country, say for an example, an export or import that is taking place from India is also interstate transactions. So in GST, what happens? Normally all over the world, more than 160 countries are adopting GST, but in India we follow a dual GST model because we are a federal system of government where the power is equally shared between the state and the central. Here what happens? The central government has some powers and the state government has some powers. So what is under the purview of central government and what is under the purview of state government is being discussed in this particular slide. So, there are three types of taxes. One is CGST, the second one is SGST, and the last one is IGST. CGST stands for Central Goods and Services Tax, which is levied by the central government only on the intra-state supply of goods and services. So, I again say what is intra? Intra means any transaction or any supply which happens within a particular state. For example, a transaction that is happening only within Tamil Nadu or only within Pondicherry or only which is happening within Maharashtra. Those transactions are under the purview of CGST. And coming to SGST or UTGST, SGST here means State Goods and Services Tax and UTGST is which is being followed by the Union Territories. So they use Union Territory Goods and Services Tax. So here again the intra-state supply of goods and services are taxed. Transaction which is happening within a particular state or within a particular union territory comes under the purview of UTGST or STGST. Next, the last one being IGST, Integrated Goods and Services Tax, which is the transaction which is happening on interstate supply. So here interstate supply means any supply which happens within two states or outside a country. So, in case of an interstate supply, we have, last slide. In case of an interstate supply, we have CGST and SGST. In case of intrastate supply, we have an example here, sun manufacturers. For example, sun manufacturers in Tamil Nadu supply goods to Moon Limited, who is a wholesaler, again is located in Trichy, which is in Tamil Nadu. Here the amount is 1 lakh. Let us see this example. So, sun manufacturers is in Tamil Nadu. Again, the Moon Limited, which is a wholesaler, is also in Tamil Nadu. So, both the parties, the supplier and the receiver of the supplier, both are located in Tamil Nadu, which is a particular state. So, here what happens? CGST and SGST are only applied. So, if 1 lakh is the amount and 18% is the GST, what will be the GST? GST will be 18,000, which is split between the state government and the central government in case of an intra-state supply. So CGST 9000, SGST 9000. Let us move on for the second example. This Moon Limited, which is located in Trichy, is now supplying the same goods to a retailer. We have seen that Moon Limited is a wholesaler. Now this wholesaler will definitely supply some goods to the retailer. So in such case, he will put some value addition. So here that 1,50,000 goods is being supplied to Star Company Limited, which is a retailer. Okay, that retailer is being located in Kerala. So Moon Limited in Trichy supply goods to Star and Co, a retailer in Kerala. So you have to see 2 points. One is the point of supply from where the goods arises and the destination. So the point which where the supply initiates is in Trichy, is in Tamil Nadu. Where the goods reaches, it is in Kerala. So both states, 2 states are connected here. So one is Tamil Nadu and another one being Kerala. So automatically what happens? This becomes an interstate transaction. This becomes an interstate transaction. When that is an interstate transaction, there is only one tax, which is integrated goods and services tax. So there is no split up between the state government and the central government. The entire taxation of the interstate transaction goes to the central government only. From then onwards, they will split the tax which is being given to the state government. And the last one, let us go for the last step. Here the Star and Co, who was a retailer who was situated in Kerala, now sells the goods to the ultimate consumer. Okay, let us take he is a retailer, he will automatically sell the goods to the ultimate consumer. So this consumer is buying the product from Star Limited or Star and Co. So what happens? This becomes an intra-state transaction. How? Both the retailer and the consumer, both are located in Kerala. So automatically what happened? This becomes an intra-state transaction. As we have already discussed, for an intra-state transaction, there are 2 taxes. One is CGST and another one is SGST. Here the amount of supply is 2 lakhs. If 2 lakhs is taxed at 18%, it is 36,000. That 36,000 is split between the central GST and the state GST. So the final points that you have to carry in your mind is that there are 2 supplies. One is intra-state supply and another one is interstate supply. When there is an intra-state supply, the transaction happens within the state. Let's conclude now. So there are 3 taxes in India. One is CGST, Central Goods and Services Tax. The second one is State Goods and Services Tax. The third one is the Integrated Goods and Services Tax. So both CGST and SGST applies when there is an intra-state supply. IGST is applicable only in case of an interstate supply. Again, I'll recall, intra-state supply means a supply which happens within a particular state, and interstate means a supply which happens outside the state or even outside the country. Thank you for watching.